Is this just a blip in the rally? Here now to discuss it, Carol Roth, Future File Legacy Planning System creator, and Doug Flynn, Zito Capital Management founder. Great to see you both. Carol, let's start with you. The fact of the matter is we don't know where this is going or how Iran is going to retaliate. I would expect on this kind of news a steeper drop today. It seems that the markets were pretty measured.
Yeah, I think it was a very muted response, especially since the markets were up 300 points yesterday and going into a weekend. You didn't get that big dip that you might have expected, like we saw when we had the Saudi Arabia situation a few months back. But I was actually even more surprised we didn't see a bigger sell-off, not just because of the Iran situation, but because of the ISM numbers. I mean, this was the lowest read that we've had since June 2009 and shows significant weakness in the manufacturing sector, which I think is a bigger threat at this point in time for the market.
All right, oil prices spiking following the death of Iran's top general. Let's go to Phil Flynn. Phil.
We saw a significant run-up. In fact, the highest prices we've seen since last April in crude oil, even higher than when Iran attacked the Saudi oil facilities. A lot of risk on, a lot of concern in the marketplace, but we did pull back off of the highs. Why? Mainly because we don't know what comes next. Is this going to be a sign of an escalation to tensions in the oil regions? Are they going to spike against oil, or is it going to act as a deterrent? That's the big debate right now. But there is no debate on the gold market. Gold market is a safe haven, just absolutely surged today, even higher than the prices we saw in April after the Saudi attack. In fact, the highest since last September. So really what we're seeing here is a lot of risk on trading when it comes to the oil prices. Now, we got another report from the Department of Energy that also supported prices, a big drawdown in crude oil inventories, over 11 million barrels week over week. The only thing that tempered that is we did see a big increase in products. One of the concerns is distillate stocks. That could reflect some of the slowdown that we saw in the manufacturing data. And so that may have tempered the rally right now. But it's going to be a very interesting weekend. Oil traders on pins and needles. Back to you.
Yeah, definitely. Phil, thank you for that. Carol and Doug are back to react. I mean, Doug, what strikes me is that we are in a much better position facing any sort of insecurity in the Middle East than we used to be before we had so much domestic production and before, the fracking revolution.
Yeah. Energy independence will do that to you. We certainly rely a lot less on what goes on over there, which I think is part of why we have such low volatility in terms of the reaction to the markets. I mean, we've been in a low volatility situation all of last year. We were only down not even 7% for the year, and the average at some point during the year you're down 14%. We didn't even come halfway through that, and this sort of continues that. We would have expected a little more of a reaction, but it's much more muted. So we're sort of in still that lower volatility environment, which shows you that these kinds of things are not having the reaction that everyone thinks that they should have, and so you can't really trade it like you might want to.
Yeah, Carol, what do you think about that? I mean, you were talking about the manufacturing data. The oil market is more focused on that probably than what's going on in the Middle East. I mean,
potentially it may be. I mean, if you think about it, we're producing somewhere around 12 million barrels a day, which is just a staggering turn from where we were only a decade ago. And as I said before, I really think that the manufacturing issue in terms of the effect on the economy and the market is going to have a much bigger effect than what happens here. Because if you look at the Saudi Arabia situation, they got that back online so quickly. So I think people are really taking a tempered response.
All right. A bright spot in the sea of red today. Tesla spiking to record territory after the electric car company reported deliveries that beat Wall Street's expectations. Carol, you look at Tesla and you wonder if the upward momentum is going to last here, or is Elon Musk going to do something to mess it up?
Well, I think that a lot of the upward momentum you saw today was the tremendous amount of short sellers having to cover once they saw those delivery numbers. If you look at the valuation from Tesla, even though I'm appreciate the fact that they have had the ability to deliver, I still think the valuation is so completely out of whack. Compare it to something like a GM that trades at like 0.3 times sales. They're trading at 3.26 or 3.3 times sales. It's just from a stock ownership perspective, still a very, very risky trade, and one that I'm not sure makes a lot of sense.
Doug, over to you. You look at this kind of stock in a market today, specifically when the stock market is down, and you see Tesla get a pop like this. As investors are looking for places to put capital, stocks to buy, would you be a buyer?
Sure. I don't think I could support buying Tesla at these prices. I mean, I did like it when there was a 200 handle on it. In the 300s, I would say, how do you keep buying it with a 400 plus number on it. I don't know. If you don't already own it, how you chase that. I think you have to look at the things that have a little bit less volatility. I think you have to look at the things that maybe are in the areas that didn't perform well last year, such as healthcare, other areas. Although tech is still going to do well, this one's tough to follow after a run up like this. That's the mistake a lot of people make. They wait till it's up 100% and then they want to get in versus finding something that really hasn't moved with the market move that we had in the last year. That would be where I would be looking.
Doug, Carol, great to see you. Thank you.
Absolutely.